2015 was a year of polarised transactional activity, with the gravitation of equity to the capital cities immense, and with Melbourne and Sydney witnessing a frenetic pace of transactional activity not seen for many years. Brisbane followed suit with some yield compression as a result of the competitive tension in the eastern seaboard capitals. Transactions in Perth and Adelaide were relatively subdued as a result of plateauing trading conditions. Nationally, there was about $1.5 billion worth of transactional activity, the most for 10 years. Positive sentiment and increased levels of activity were exemplified in some major transactions returning to the Melbourne and Sydney markets. For example, the sale of the leasehold interest in the Chase Inn in Victoria for $29 million, the sale of the Golden Sheaf Hotel for in excess of $41 million, and the sale of the Newport Arms Hotel for $46 million. Depth of demand for gaming-centric hotels in Sydney peaked, as seen in the sale of the Crown Hotel at Revesby for circa $32 million, the Oasis Hotel in Campsie for $39 million, and the Tiger Bar Hotel for $28 million. There was continued yield compression in the investment hotel asset class. Certainly for ALH and Liquorland tenanted assets that was the case, but we also saw renewed interest in hotels leased to the more recognised private operators nationally, such as the sale of the Club Hotel and Westwaters hotels in Caroline Springs, and of course the sale of the high-profile Golden Sheaf Hotel in Double Bay. Strategically located hybrid hotel operating and development opportunities were also intensely sought by astute investors. Examples of sales were the Chalk Hotel in Brisbane, the Novotel Brighton Hotel, and more recently the Bourbon Hotel and Sydney Swans Club in Potts Point. Probably the boldest trend to emerge in 2015 was the market's re-engagement with F&B hotel operations. The determined acquisition by the newly formed Public House Group in Sydney, followed by the national consolidation and roll-up strategy of the Melbourne-based Dixon Group, were further evidence of this. As a result, there's a renewed interest in leasehold operations, which we see extending already into 2016. 2015 also witnessed the winding down of the Metcash pub and liquor strategy in Queensland, the emergence of a new Vade Capital hotel investment vehicle, being primary shareholders of Redcape, the launching of a number of new private equity hotel acquisition syndications, such as White Partners, the continued decimation of trade in the King's Cross precinct in Sydney, and therefore the decentralisation of entertainment zones throughout the suburbs, and of course a massive return to interest in leasehold gaming-centric venues in Victoria. A few factors are set to shape activity in 2016. Any proposed GST or taxation impositions on earnings, state-based gaming and trading legislation, such as the proposed lockouts that we've been reading about in Queensland, the long-mooted takeover of Redcape and listing by the Moelis and Mears joint venture, and the securitisation of the Dixon's national consolidation strategy. With a number of hotels already exchanged in 2016, it's been a busy start to what we expect to be another active year for the Australian hotel market.